what the RSI basically is kind of like the sentiment of buyers and sellers, right? It lets you know when the people are coming in, who's winning, more buyers versus more sellers. What it doesn't tell you is how much volume of the buyers and sellers are actually coming in, and but it does give you an idea of what's happening in there. So if you can see here on the bottom, we just go to a 4-hour time frame, and as soon as the 4-hour RSI breaks up, we hit this white little arrow. That's our start of an upward trend. And then here, when it breaks down, you can see that is our downward trend, right? And that's where the yellow box would end, right? So that would be considered our 4-hour zone, right? Very easy to follow, very easy to kind of like see. That just means that when this process is happening, then that's where we consider the long positions to be a little more the right decision, or the momentum of the I'd say market at that time, right? Now, there's a lot more in there, but this just by following this simple little trading zone box here, it lets you know what the market's doing, right? So that's why how you say, like, we'll watch this Asian market, this market, the 200 moving average, and all those things. This will pretty much simplify all that. We don't need all that data. We can just look at the RSI, and when it's bottomed out and starts to make its move up, we know that there's life coming back into the market. So that's trading zone number one. And all we're going to do here is kind of scroll down, and we're just going to get to where we see another trading zone opportunity like that. And this is where when the market when it just resets itself, right, just kind of like goes back into it. So here's the 4-hour heading down. It bounces off of the 20 line, right, and then it prints here, right? Now when it prints up, that would be considered an upward move, right? And then we can put another white arrow here, and then when it heads down, we'd be in the same scenario. It would print here, and this would be our red arrow, and this is just another trading zone, right? And that would create another trading box that we would say, okay, when that 4-hour bounced up, we would consider this area here another trading zone. That makes sense?
Yeah, I see. So, like when we're like charting this out, right?
Mm-hmm.
Like now, like we're going off of obviously what's already happened. So when you take this box, like when you extend it out, like how how are you basing your next trades off of the future? Like, because you're trying to mimic what it just did, right? As long as it stays in that target zone.
Well, you have where, okay, so this is like, so when the 4-hour breaks up, right? You see how, like, all we're doing here is going back to see what the law of average is, right? So the 4-hour breaks up right there, it creates this little buy zone, and then when it breaks down, that's our end of our buy zone, right? That's the end of our box. Then it breaks up again, right? So we have another buy zone, and that goes until it breaks down, which would be this here, this candle there. And if you look at like how it breaks down, right? That's You're not going to see when you're looking at the RSI itself, right? You don't know that this is breaking down until it prints, which means the arrow would be here, right? And when it prints, then that would be basically where you would know that you're heading down on the 4-hour. Okay, so that's just how it prints out. Now, what we're looking at here is just kind of like having buy zones that we can look at and say, okay, when the 4 hour is at the bottom or heading up, right? It creates a buy zone. So here it starts to head up again. Let me get my box. And then here it starts to head down, right? So there's the down. And all this is doing for us is just giving us a simple ideal of tr- buy zones and trading zones that we can look at and consider to be areas that we would look to trade. Now we're going to do a little more to it to kind of like get us into what makes it a, we call them A, B, and C trades, right? Where the massive volume is a little bit better versus like a trade that's a little bit slower, right? This just kind of gives us an ideal of in this particular area where these trades were possibilities where it would have been, that's where the masses are deciding that they're buying. Now, just because the sentiment and everyone's buying doesn't mean that they're buying enough to actually change the market, right? The,
Right.
the RSIs can be rolling up, flying up, but if the money's not there, then there's very small buys. It doesn't affect the price, right? And that's
Yeah.
where
Sure.
you have to add, kind of like the next part of it is, finding the, how do I tell when I'm making these moves, like where is the, where's the money, right? That's kind of what we have because there's always the movements to where people are buying and selling, but there's also like where does it matter, right?
Yeah, well, that was also the other part. I'm glad you said that. Like back then, when I would be trading, it was like Bitcoin ruled. So Bitcoin would have its little run for a day or two or whatever, and then as soon as it started giving back, you knew your altcoins were going to. It was literally like somebody squeezing a balloon left to right, left to right. So if you would try to find that sweet spot, if you weren't greedy, you could jump in and out. But everybody hopes for that Lambo move.
Yeah, yeah. And this is kind of where, so if you can see here, like right now we have the 4 hour RSI bending up, right? So it just printed. We're aware, so that we created a box. So here we would be looking for an upward move, right? And then I'm just gonna put these in here so we have the basics. We can kind of go back and look at all these little moves here that um, create opportunities for us to decide, you know, possible trades, right? Now, what we want to do here is, when we have these possible trades, it's then it comes down to piecing together like other parts of it, right? Which is really the money, okay? So, and we're looking here just kind of like what just recently happened because that's the market that we're in. So now that we have trading zones, these trading zones are just basically instead of looking at all the data and reading everybody's columns and all that shit, I can tell right now that we're in a situation where Solana is an upward type position move, right? So depending on what trade I'm doing or whatever, this is the beginning of a move. So this would be if let's say you're trading a bigger bag or something like that. This is somewhere you would do like a 20x because you're bouncing off the floor. Let's see. We'll just we always put a stop loss in there. All right. So like a 20x. Now this is just basically Solana with a 4 hour up, right? That would solidify me if I'm doing a trade on this. Would be a 20x leverage trade, 300 to $1,000 bag, and that's kind of like the trade that we would make in there. So let's make this. There we go. So we have a $500 bag in there, right? 20x 500 based on the 4 hour breaking up, right? So that's the current trade. It's kind of what you're asking, like how do you read it currently? Well, currently this would be a trade
Mm-hmm.
box for me because I have the 4 hour bouncing up, right? Now,
Mm-hmm.
once we have the format in there, we can go back and what we're looking for are simply the areas that created the best moves, right? So this is where we use the moon indicator. And in the moon indicator, what I'm going to do is I'm just going to draw the box and I'm going to stick it into our indicator here just to let me know that this is where the best moves happened with the RSI, right? And I'm just going to finish up the stochastic here so that I have everything that I want. All right, so this one's down, this one's up, this one's down, and this is just a simple step, right? So it's just a step of the 4 hour RSI heading up and then the 4 hour RSI heading down, right? Pretty simple to do, pretty simple to follow. This is literally all it is the sentiment of the market, as you were saying, trading with the people.
Mm-hmm.
right? So now I have that sentiment here, and I'm just putting it in these boxes here, right? And what that allows me to do is it kind of like just puts this. I don't need to, do, you know, watch all the. I don't need a lot of information. I just need the sentiment
Mm-hmm.
indicator, the stochastic, to tell me, when the people are interested in buying and when they're interested in selling, right? It's the only data I really need to kind of like be in a situation that um, puts me in buying and sell situations. So now the other thing I'm going to do
So
here is I'm going to add,
what is it that the moon indicators actually do? Like, what is that? Is that like a formula that you came up with?
yeah. So the moon indicator's
Okay.
volume, it's money, right?
Okay.
So instead of like what the RSIs are sentiment, right? They're basically
Mm-hmm.
telling you what the market is doing, right? Meaning that buyers are doing better than sellers. The problem is it doesn't tell you that it doesn't really mean anything because you can have a million buys for a
Mm-hmm.
dollar. It doesn't even move the market, right? Money is the volume is king with money. Money moves the price. So now that we have this basis, written down here, what we can do is now that we have that, we can go to the next indicator, which is the moon indicator, right? And all I'm going to do here is I'm just going to look for the best moves that happened during the 4 hour, right? Because I don't need all the 4 hours. What I need are the best moves of the 4 hour, right? And this is where measuring kind of matters too. Um, and so we measured these moves out, right? You just go to your long position, and I'm going to measure this smaller moon here, right? So these little spikes are 7, 8%. So these are all pretty good moves here. And then what we're going to do is we're just going to piece together what we call a strategy. Strategy number one would be defining a trade that we find to be um, worth taking. And then strategy number two is basically um, doing like the entry of the trade, right? So now that we have this section here, we have all these different times, different days, that the market decided that Solana in these situations um, created, opportunities for long positions, right? And we can see here that they had pretty good moves. And these smaller moves we're just going to kind of pass because they're secondary moves. And that's pretty much all we're going to look at are these bigger moves here. And then once we have the bigger moves in there, then we just kind of like see if how to build a strategy into these bigger moves so that we can find the steps that we can rinse and repeat within this pattern, right? All right, so this is this here. And we're going to start with the 4 hour kind of as our guide to this so that we're working off a very simple time frame. Okay. So now if I'm looking at this and I take a look and now I'm just looking at the moon indicator, right? I can take this and go, okay, what are my like what do I see that always causes uh, trades to do well? Do you see something? Let me blow it up a little. So the boxes represent when the trade is going to do something. Do you? So this box is where we did well. Do you notice anything there? And I move to the next one, right? And this is where you were talking about how looking at patterns and is there anything here that you know? So normally for us, these circles here, right? We call these moons. Normally, when a moon hits, a moon is going to create a um, a jump or a push, right? So when those moons hit, that's normally when we see a spike, right? See where these moons are hitting? We're getting that green spike in those moon areas, right? And that for me is kind of like, okay, so if I had a strategy where I was trading the 4 hour green moon, right? That's kind of like a strategy that I could look at and go, man, maybe at Solana I could just do a 4 hour green moon. All right, you can see the moon when the moon's hit, I normally get what I want, right? So now what I have to do is kind of like cross reference that and say, okay, you know, when the green moons come in, am I always getting the biggest moves, right? So now what I need is something to confirm the bigger moves with a green moon, right? And this is where you can use the lower time frames for steps that basically confirm it. Like I said, we don't trade against the 1 hour. So a lot of times trading with the 1 hour will bring us pockets of success, right? So the 4 hour moons do well to get the motion in there, meaning that if there's any buy signals here where you see how there's a blue moon here in this section here,
Mm-hmm.
right? I wouldn't make a trade in this section here because there's a blue moon, right? So that's just the basic.
What is the blue? What does the blue moon symbolize?
So the blue moon just means that the sellers are selling more than people are willing to buy. The money's low.
Okay.
So this is all money. This is just money. So when
Gotcha.
the blue moon comes in, it just tells you that we're in a state where the money's kind of like, leaking out of the trade, right?
Mm-hmm.
A little less money in that area, which means if there's anything that would put me in a situation to buy here, I wouldn't buy until I got the next move over, which is basically the green moon. See? So whatever happens, normally I'm not going to make a move unless there's a green moon, right? So for instance, notice here that, and what I mean by this is that let's say that you have a strategy, right? And remember up top, all these boxes up top, these boxes are created off of one thing, the strategy that the RSI is heading up. So what most people do is they use the RSI as an indicator to indicate when the masses are buying. So kind of like your entire philosophy was watch what everyone's doing, buy with the people, and if you're buying with momentum, then you should be in a good position. Correct?
Right.
Okay. So
And then later on, I threw in the Fibonacci, looking for the golden pocket as an added, like, ooh,
right,
this will, you know,
right, right.
like better.
And this is all
Like,
good.
you know what I mean?
This is all good
Like
because
all
here's
the
the thing.
hooks.
Yeah, yeah, but it's not bad that you have that in there because here's the reality is that 90% of people trade. You guys are all trading the same way. This is why 90% of people lose.
Right.
It doesn't matter when you're putting in the Fibonacci's. It doesn't matter what support. How you're doing it. It doesn't matter how they call it or what people describe their like when people teach trading or I don't want to say trading when people teach their strategy, it's normally the same as everyone else's. They just say it a little bit different, where it's kind of like someone will say, "Well, I use the support and resistance," and then another person will say, "Well, I use the Fibonacci's." The Fibonacci's are support and resistance. If you looked at them and put them and compared them to your support and resistance lines, they're the same lines, right? So it's all the same. And when you use order blocks or all these things, if you really look at it, you realize that it all comes down to be the same thing, anyways, right? So the
Mm-hmm.
only thing that matters is when the money is coming in to actually make all the indicators or all the strategies that are setting up to be bull flags, bull pennants, all that shit. The only thing that matters is if the money shows up when that happens, right? So
Right.
if we had a theory or we had a let's say that our strategy was this. We're going to trade with momentum, right? So every time the RF 4 hour RSI hits the bottom and heads up, we're going to get in a trade. So if we go up here, right, to this upper level where the candles are, every one of these yellow boxes that are on here are all when the 4 hour RSI started to head up, right? Now you can see
Mm-hmm.
and this is just so you understand like trading as a whole, right? Here's one trade that did well. These two, I mean, these are not bad trades. All depending on when you get in, because if we did measure these, right, if we kind of measured them out, there's scenarios here that these trades did have, 1% moves, right? So if you're a person that's trading, 100x leverage, these trades really worked out for you, right? If you're someone who's trading 10x leverage, not so much because it only moved 1 to 2%. That's only 20%, right? So even on these smaller trades, right, it was able to squeak out a 1.7. So it's not like these are bad trades. They're just, there's you have to. This is where what's called a system, right? The system is how you execute on these trades, right? Once you find a trade. So if we just went out here, like theoretically, right, and I said, hey, listen, every single time the 4 hour breaks up, right, which most people do, we're going to make a trade. And I'm going to trade, and I'm going to get in this trade, and then every time it breaks up, I'm going to trade the RSI up until it breaks down, right? And then after it breaks down, I'm out, right? And I'm doing a 10x leverage, right? This was a 6% move. So this first yellow box, I would have made 60%. On this second box, I would have actually ended up losing because by the time I was notified it was going down, it already dropped from my entry point because my entry would have been here. I would have lost this trade because I would have been, hit out. So most people that do this trading don't have stop losses. Let's say I have $1,000, right? Just kind of break you down and go over a regular trading pattern, right? So you could come over here and go, okay, listen, this is my strategy, and this strategy, I mean, this is actual strategy that most traders will actually use. So this first trade we get 6%. So let's say we got $1,000 in there, 10x leverage. That's 60%. So I'm up $600, right? Now on the next move, by the time this goes out, I don't hit my the by the time, see how this box breaks down. So before I even get a chance to really make a move here to close my trade, by the time this all notifies me that the 4 hour is going down, more than likely I'm probably already down 2.3%, right? So if I'm doing 10x, not too shabby, maybe 30% on my 1,000, right? So now I'm negative 300 and I call it a day, right? So now I move to my next trade. And here's my box. It happens again. I get a buy signal. It jumps up. By the time the 4 hour comes back around, I'm down again, another 3%. So now I'm down another 300. And then finally I get this one, which isn't bad. This one hops in. This one actually runs pretty good. By the time this says no to me, I'm up about 11%, right? So that would be 100%. So now I'm up $1,000. And then this trade here, by the time I get this done, I'm negative about $300, so which isn't bad. And then as I move across, this one barely gets off, and then I go negative another 300. And then this trade, negative another 300. And then I have another good runner here. This one runs for, let's see, about 3%, so that's 30%, so that's plus 300. And then we have this box here, and this one barely gets off, and then I lose another 300. And then I have a big trade here, right, that does really well. It jumps, and this one runs up, and by the time I get out of this one, it's 11%. So here I'm up 1,000, right? So as you can see, as we go back and forth on this, that strategy it's not bad when you catch the good ones because you can you can double your bag, make $1,000. But our pullbacks are taking such big chunks out of us that we're losing 300-400 per pullback out of our 1,000. You know what I'm saying? So it's like,
Right.
we got a lot more losers. We ended up having, so like out of these we had one winner, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So out of these 10, we had 1, 2, 3, 4 big ones, 6 bad ones, right? And to be honest, most traders they trade like that. They'll have 4 winners that do 100 to 200%, and their losers will be basically, full out losers where they lose everything. But the way they look at it is if their four winners can produce 300%, that's a 1,200%, move. And then there's six losers, even if they lost $1,000 per of it, it's like at the end of it, it's like, well, I'm still up because even though I lost 600%, I'm up 1,200%. So at the end of the day, I'm up 600%. So I'm up 6x, right?
You ever follow the girl Ragsy? She has like she
Mm-hmm.
wears like crazy colored lipstick or whatever.
Yeah, yeah.
Yeah, she's big on that. Like she talks like she's big on trading Solana and all. Like she's a cool chick,
Mm-hmm.
but that's like she says this basically the same thing you just said. Like people give her a hard time, like, oh, you called that one wrong, blah blah blah. And she's like, who gives a shit, dude? What about these other two that I called right? You
Mm-hmm.
know what I mean? I got you 600% gain on that, and you're crying about a 20% loss or whatever. You know, it's like you just it's like you said, the law of average. It's
It's the law of average,
stick to the program.
right?
Yeah.
And so I mean, it's that's why the beauty of like what we're doing here in the crypto course 102 is a complete. It's the only course that's ever been taught where what we're doing is explaining execution of trades.
Mm-hmm.
Doesn't matter what trades you're doing or what philosophy or how you see how to enter or where how you want to trade. What this helps you
Mm-hmm.
do is find the best. First is develop a trade and develop it meaning taking out the worst parts of it so that you don't have the where you're winning three trades that go 600 but you lose seven trades at 100, right? Because the reality is how most this and this concept always blew me away. This is why I was just like when I was trading 10 years ago, learning 15 years. The first 5 years I was just would run into traders and people, professional traders, and they would be like, man, I was killing it, and I would look at their trades and be like, check this out, and they'll have 10 trades, right? And they'll do a $1,000 bag, and seven of the trades lost, but the other three trades win for 500, 4 to 5 to 600%. So at the end of the day, it's like okay, they're getting 4,000 on one, right? So that's kind of like their thing, and then the next one they got, let's say like 3,000 on another, and the other one got 3,000. So they have a $10,000 profit, and then they lost seven. So to them, they're like, dude, I made 3,000 this week, and all I know was like, I was like, damn, but you lost seven. Like I can't do that. Like I can't. I just it was never in me to be like, yeah, that's success. I don't know, man. I mean, I
Right.
just to me even when I say it today, it's just none of that shit makes sense to me. Like fuck that, right? But that's how that's if you're in a professional trading scenario, that's how they trade, right? And that's why you can't have emotions in the trading game because most people, if they sat there and said, "Listen, I got to take 10 grand, I got to invest 1,000 in every one of the trades I'm going to do, and three of them have to go for 300 to 500%, and the other seven I'm going to lose." And you have to be willing to watch $7,000 go down the drain because you might
Yep.
you might lose your first four trades. You might be down $4,000 before you see a 400% winner. That takes a lot of like that takes a lot.
Balls.
Yeah, that takes I mean, it's a lot. It's a lot to watch for. I mean, it's even if you have money, like I don't know. I mean, it's just the Jew in me, but it's like I just can't. I just can't. I just to me, I'm just man. There's a better way.
I get it.
Yeah, so that's
No.
where when these people see these trades, if you're trading a strategy, right? This kind of why the course 102 is. This is why I'm building this course, right? The trading course 102 is to explain to you the overall philosophy of trading, right? And then the overall ability to win, right? And the only way you can win is you have to be consistent, right? If you don't understand how to execute, right, then you'll never know how to like fucking execute, right? If you don't understand that if you do $1,000 trade and lose 50%, and you do another $1,000 trade and you lose 50%, You do another $1,000 trade and you lose 50%. And then you do a $300 trade and do a 300 return. You lost 1,500, and then you did a 300, or let's say fuck it, a $500 trade, and it went 3x, right? You were like, damn, that was a great. Nah, you broke fucking even. Had you played the 1,000 like you're supposed to, then you would have made back your losses and been up 1,500. But you didn't have the balls to do it because you didn't understand what you were doing wrong. If you're going to have a bag, whatever the bag is, it has to be the same amount. You got to have 10
Yeah.
fucking bag. You got to be able to do it 10 fucking times. And your job is to win four of those trades. And this is old school philosophy. Three of those trades have to go for 300, right? And this is all mathematics. This is systematic trading, right? Let's say that you have a better system and you got where you can win 4 out of 10, right? Those 4 out of 10 have to go for 200%, right? Meaning that if you're doing $100, four of those have to make $800, right? And then if you lose the other six and you ended up, let's say, losing all of it, right? What that brings you down to is that just takes you down to where it's like, okay, at the end of these 10 $100 trades, if I had no stop loss, I made $200, right? And that's just
Uh-huh.
doing some basic shit. Now, some people will be like, oh, that's fucking, that's no money. But let's say I did those 10 trades a day and I averaged $200 a day, right? And I did that for fucking 20 days a month. I'm making 4 grand a
Yeah.
month. So that's why, the trading 102 course that I created is basically, it's a whole nother level of trading. It's teaching you how to fucking win, right? It doesn't matter how the fuck you see the charts. It doesn't matter what you think all that matters is I'm going to show you how to unlock the fucking door that you have slammed shut, which is simply the door that says, this is how you create income. This is how you win, right? This is the winning trade, right? So it doesn't matter how you do it. You have to know the fundamentals of doing all this and how to actually fucking make a trade. One is that you have to trade the same fucking amount every single time, the same bag. You have to have this, you know what I mean? And when you make your 10 trades, if you're doing $100 bag, it's always 100, 10 fucking times in a row. If you're doing 1,000, it's a
Uh-huh.
thousand, 10 times in a row. You're Now the systems are where people kind of get fucked up because systems are where your stop losses matter. Do you do 50% stop losses? Do you do 35? Do you do 25, right? And a lot of people can't come up with a system or understand how to create a system. So in reality what they fucking do is they create the no stop limit. Basically saying that, based on my thoughts here, most of the time this is going to go up, and I don't want to get stopped out and then it goes on a run when I'm sleeping, because then that costs me
Uh-huh.
one of my wins. So they will go ahead and risk the other 50% of their money just to fucking have the opportunity to see it run, right? And it all
Yeah.
depends. I mean, shit, I could give you a fucking 4 hour RSI right now. I just showed you. If you put $1,000 every time the 4 hour RSI broke up, and all you did was add the moon indicator to your system, you would make a lot of fucking money. And this is not a hard fucking thing to do. But the hardest thing to do here is calculating the mathematical side to the equations of stop losses, entries, etc., to get the best results out of how to execute really. So what we're doing
Uh-huh.
here is,
Are you saying like the most bang for your buck? So the bigger your bag is, the like that's going to adjust how you get in and out of the trade.
no, no. I mean, this is where the mistake is made, right? The money doesn't matter;
Mhm.
it's percentages, right?
Okay.
Once you master doing percentages, then you just the money is just based on how much you want to fucking make or how much you have, right?
Right.
The first
Well,
the
I mean,
first thing is,
the more that you have, like, I guess like when I'm getting confused because when you said like all the numbers have to be the same every time or whatever.
mm-hmm,
So if I'm making a trade for 1,000, let's say I
right,
double up, now I got 2 grand. I'm letting the 2 grand just ride
No,
into my next trade.
no.
No.
It would be 1,000.
What do you mean? Like
So
if I if
let's
I
say
if
you
I
started
would
with a
end up,
thousand, right?
yeah.
You
Mm-hmm.
doubled up. Now you have 2,000. The next
Right.
trade you make, you would make it a $2,000 trade.
Yes.
No, that's the mistake. The law of average,
So that's.
it means you're going to
Mm-hmm.
lose one of these trades. So for instance, let's do this. So let's say that you have $1,000 trade, right? And you double up and you make it $2,000. And then you do your next trade, right? So now you're up 1,000. You do your next trade, you double up, you're up 1,000. You do your next trade, you double up, you're up 1,000, right? Now let's say the next trade you go out there and you end up losing, let's just say the whole $1,000, right? Now
Mm-hmm.
that bag is gone, right? So now you're down $1,000 and you're back to doing what you're doing, and now you turn around and do the next trade, and this will be your one, two, three. This will be your fourth trade. So this will be your fifth trade. So then you go back in and here you hit it for 1,000, right? So if you let's say you're just doing 5 trades like that, right? So if you did 5 trades and you did them at $1,000, $1,000 you win, you're up 1,000. $1,000 you win, you're up 2,000. $1,000 you lose, you're up 1,000. The next trade you win, you're up 3,000. The next trade you lose, you're at 2,000. Right now, that puts you where you would be up $2,000. Right, that's after 5 trades. If you did it your way and you did $1,000 and you won, and the next trade you did $2,000 and you won, and then you said, okay, here's my $4,000, and then you lose 50% of it, right? Now you're back down to 2,000, but that's only 3 trades. Now if you go to the next trade and you do 2,000 and you lose half of that, now you're at $1,000 and now you're at your 4 trades. So then if you go again and you win, right? You have your last 1,000. Now you're back at the same window. You see what I'm saying?
Yeah.
When you risk more, you take a bigger loss on. You can't. That's like saying, okay, here's how we're gonna win. Every time we play VC, you give me. I'm gonna when I win, give me a quarter, and then when you win, I'll give you two. As you increase the bag, you're giving the market twice as much
Uh,
back.
I got you.
So if you let's say that you averagely winning, four out of, or let's just say 50% of the time, right?
Mm-hmm.
When you start off, you might win, and then when you lose, you gave back triple. So your 2 losses, even
Yeah.
if they're let's say your 2 losses, they're actually double. They're 4 losses. So at the end of it, if you won 5 and lost 5, your losses, let's just say half of them were doubled. That would basically be another 2. So it'd be like you winning 5, losing 7,
Hmm.
right? The only way it works is that if you get to 2,000 and you lose 50%, the next trade has to be 2,000. Once you hit 2,000, you got to keep trading 2,000.
Yeah. True.
Because let's say you get to 1,000. Now you have 2,000. Then you trade and lose half of it. You're back to 1,000. Then you trade, you win again. You're at 1,000. Now you go back for 2,000, and now you lose half again. You're at 1,000. Right?
Yeah,
You're
but
always doubling.
I'm not gonna let myself go. Uh, like roll back 50%. There's no way. Like I would be usually like a 20% stop loss unless I let my emotion get it and I had like a feeling like, oh, it's going to turn any second now. It's going to turn any
Yeah,
second now, and I had that turn any second now last for days and weeks.
yeah, and that would be like, so what we would do there is kind of like we would break down. So first you have to do, right, is you have to get yourself in a situation. This our 20x is up, doing well here. So normally this trade here, this is where I would be rocking like a 50x or 70, right? So it'd be 3 times this, but not too shabby. So this is, you see right here, see how we got our Solana trade? So that's our little,
Mm-hmm.
that's our move there. So now this is where the goal is, you know, a 20% move. This is normally where you would say, okay, this is where I'm collecting, right? Last price, collect, keep it simple, right? And you'd move on to, you know, the next, you'd let it reset to where it's going. Now the difference is if I want to make more money here, right? Then all I would do is instead of 500 bucks, I would trade 2,000. See what I'm saying? But what you have to do is like what we're doing here is the very first step is you have to develop a trade, right? That you can do, that you see the results that are, you know, the law of average are always in your favor, right? So here's what we're doing here. So all these yellow boxes here are the trade that when the RSI decides to break up, right? So when the 4-hour RSI goes up, all these yellow boxes here are possible trades, right? The difference is
Uh-huh.
if we went here and we said, okay, we're going to put a um, blue box when there's a blue moon, right? And
Blue to
during,
green.
and that's, but so basically the blue box is this, right? See the blue moon
Mm-hmm.
down here.
Yeah.
So that's when the blue moon pops up, right? So if we put this blue box up here and we just kind of like use it as a reference of saying, okay, we just don't do any trades when there's a blue moon in the scenario, right? So
Uh-uh. Okay.
now that's just a step for us to be, you know, to kind of have our situation where, um, you know, it's just something that we can throw up there that's just, you know, kind of develop. So right now, developing a trade is just trying to find the patterns that, you know, make sense, right? So there we go. There's a blue moon. We pop here. There's a blue moon. We pop here. Here's the blue moon. There's a blue moon. And then here's a blue moon. Right. So now,
So,
go
so
ahead.
we're looking at all this, right? It's in hindsight. So how does do these
What?
boxes play out moving forward?
Well, how is it? So I know what you're. So this is where it's like it's not hindsight. It's what happened,
Mm-hmm.
right? It doesn't change how what happens, right? So here's the trade that we're doing right here. The 4-hour goes up, right? We entered that trade on this previous candle, and you can see right here that we're getting the movement that we're looking for. It's the upward movement. Now if I go here, I can take a quick peek. You can see that I'm not in a blue moon here, right? So if we go back here, right? So these
Uh-huh.
all these yellow boxes represent the 4-hour RSI moving up, right? If we
Uh-huh.
simply added that we don't trade it with a blue moon from the 4-hour, right? It eliminates these boxes, right? So there was no real box in here. This little shorter area, we would have waited. This box here becomes null and void. This box here becomes null and void. And you can see once we start eliminating these boxes here, it gets us to a position where we wouldn't trade these, we wouldn't trade that, we wouldn't trade that, and we wouldn't trade this. Okay, so now instead we just eliminated probably about 5 trades, right? So now when we look in here, these boxes that are left, these are the boxes that we can look at and go, okay, these are the numbers of the trades if we made this decision to use this strategy to trade with the masses or the momentum. This is where we would be. These are the trades that would actually, these yellow boxes now represent the trades that we would actually do, right? These are the trades that we would consider with the 4-hour RSI happening when we're moving from a, you know, we're not in a blue moon scenario, right? Now the only one here,
Uh-huh.
like this one here, let me see. That's a blue moon. My bad. I missed that one. I'm gonna say, why is that one down? So this is a blue moon too. Do 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 do. So we wouldn't trade this one either. And you can see the blue moons right here. So that's your blue moon. So we wouldn't trade that one. And we wouldn't trade that, that. Okay. So now we can see the yellow boxes that are left that are not in the blue moon area, right? You can see that those are the boxes that have the biggest gains. See what I'm saying? So this particular strategy would basically be that when we see the 4 hour breaking up, right? As long as there's not a blue moon when we make our decision to make that move, which is here, then we're in a good scenario. Now you notice here this is where the blue moon was looking to hit, would have been right in this area here, right? Now the other thing that we can look at as you start to get to know the moon indicator is you start to see how close things are, right? So that's the area that a blue moon would have hit when these two lines cross. So it's kind of like when the MACD crosses and all that other stuff. But that turned up and that started the movement to the upside, right? Which is where we made our decision to get a trade and start the trade that we just did, right? We started the trade based right here off of this particular scenario, which is just a 4 hour heading up, right? So no blue moon, no issue. We got what we wanted. We got 20% out of that trade. But just by having this simple strategy, right, which is 4 hour RSI heading up, no blue moon, taking an entry. Now we have all these scenarios here, and we'll get another one here when this finishes, whatever it's going to end up doing here. We'll have another percentile, right? What I mean by that is just measuring these out, right? So if we measure these out, what we're looking for is, not on the bottom of the candle, but the tip of the candle, kind of like the middle of the wick, to the top of what the movement is, right? So there's a 3.8% move. This trade over here goes for a little bit more, 6, 7, 7, 8, 9, 10%, something like that. So all these moves are pretty 5 to an average of 5 to 10%. So they're averaging about 5 per move, right? So not too shabby, right? So if we were executing these trades and we were doing something like a leverage of, let's say, 40%, the minimum that we've been seeing is we normally get about at least a 1.5% move, right? But more, right? So now what it comes down to is that if we make these trades like we just did, I did a 20x leverage, right? We pulled off a 20% gain, right? Very simple. What you're trying to do is you're trying to get to where you can repeat a trade over and over and over and get a percentile that makes sense, right? And that's where, having the strategy of what I'm trading with. So your type of strategy is, it's like what most people do is they trade with momentum, right? And momentum is just going to be with the masses, right? And the masses are just going to be the RSIs. The only difference is when we tie in the blue moon here and the moon indicator, we just don't take the trades when there's a blue moon. So that's just a step that we would use to allow us not to fall for what you call fake outs.
Gotcha.
See how that worked?
So if I have like whatever trade pulled up and I pull up the moon indicators, you said look for, what is it, green, blue, green before you get in?
Well, those are, so the first thing is strategy number 1, right? Which is a trade and a live trade, right? So this would be considered a live trade because our live trade is when the 4-hour RSI breaks to the upside and there's no blue moon, right?
Okay.
So that's strategy number 1, right? So what we would do here, let's say that we're running this trade, right? And we're gonna call it the 4-hour RSI up trade, right? And this has no levels to it, right? So some of them we have levels like breaking the 20 line, breaking this line, right? Those are just added things that we put. This is just a basic straight up 4-hour RSI we'll call it the momentum trade, right? And all this basically is when the 4-hour RSI decides to move up, right? And I would put no blue moon and whatever it's on. I forgot to put Solana, right? So I would put Sol 4-hour RSI momentum trade, right? And that's the trade that right here. What we're doing is we're going to go ahead and like um, give you this kind of momentum trade for you to test. And this is how you would post. So you'd put Solana 4-hour RSI momentum trade, bada boom, bada bing, and that's what would happen there, right? Now, when you post that, we all know what that means, right? We're all going to go, oh, the Solana 4-hour is headed up. So now we all know that we have a possible trade here, right? Very simple. Now, the difference is that's strategy one, right? Which just means the trade went live. Strategy two is how do you enter this trade, right? So let me put the I'll kind of walk through. Let me jump into the Discord here. So this here we're going to slide down, and then we have trade. So we have the 4-hour RSI trade tracker. Now I'm going to add this here. And this is just going to be the 4-hour RSI momentum. Right. And then that'll allow me to put notes in here, right? And the basics is, so the basic is the 4-hour RSI heads up, no 4-hour blue moon, right? And all that means for us is that we look at this, it's going to basically just put us into a scenario where when we're looking at this particular trade, that's the basics of the trade that we're doing there, right? So 4-hour RSI up with no 4-hour blue moon. Okay. Now we know that that's the basis of the trade. So that's strategy number one, right? 4-hour RSI up, no blue moon, right? So that would be, I'll go ahead and name it that. So that's your strategy number one, right? Now, the next part is strategy number two, right? That's your entry. So how are you going to enter this trade, right? So we go to Solana. Normally the entry is going to be on the lower time frames, right? So a lot of times what guys do is this. So if we look here, we already know where this yellow box represents and this white arrow represents the time that we would be getting into this trade for this trade. And we start looking for this trade, right? So if we look at, this is where you talk about the blue moon, green moon, blue moon, right? So here we can see that at the current time when this trade became live, right, which would be this white arrow here. When this trade became live on the white arrow, we went and looked at the 10-minute. We can see that the 10-minute already had the green moon pushing to the upside, you see? So this is where guys would do this. They would then wait for the blue moon to come for the downward move, and then they would enter on the 10-minute green moon here, which would have put the entry somewhere here. So moon reset, green, blue, green. See what I'm saying? So now the strategy would be here so far would be next 10-minute green moon, right? So when you've seen the trade, and if you looked at the trade at that time, you would have seen that you were in a green moon already. Now for you, the strategy is that you enter on the next green moon, which means you would have to have a white moon, a blue moon, and then when the next green moon came, that is when you would enter your trade. So you can post, and as you're posting here, you can even post that, right? And that's just so that
So
everybody.
when it hits the moons, is that like how like do I have to get do I get some kind of alert for that or whatever, or do you just got to keep watching the market and try to like time it or something?
Yeah, so normally you watch it, but we got to. So TradingView did something with their system. They moved from their coding. They upgraded their code, and I forgot Python or whatever, but they went to from level 5 to level 6. So normally our moon indicators would alert that. So right now we got to go ahead and we got to go back and recode them, so that now with the change in TradingView, you'll get an alert. But a lot of times what you can do is, what you should be able to do is you should be able to go to the moon, set add alert on the moon tracker, and it would just basically be a crossing, right? And then the condition would be crossing, etc. And normally that's all you really need, right? And then you would, I change this a little bit here, but okay, condition, moon crossing, value, right? Same as chart, 10 minutes, okay. What is that? Trigger once per bar. So this is, we just wanted to do once per bar, expiration, the 24th, message, right? So when you go to message, you would click message, and then you would alert it, right? And you would just name it. You would put Solana 10-minute green moon, and then you would click it, right? And then what happens is you create it, and it should have an alert that when that green moon popped in, it should pop up and give you an alert, right? But like I said, we had where they TradingView did an update, and they upgraded their um, coding side, and some of the codes have to be rewritten. But that'll go back in there. But yeah, normally what you're doing is you're waiting for that green moon to swing back around. But there'll be alerts on there pretty soon. But you can see that that would create your entry, which is off this candle here. So that's how you would create your strategy too, which is your entry, which is the next green moon. And that's pretty much it. So this is a very simple trading strategy that you can, now what it comes down to is data, right? So, and these are why we do this here, is that, so now what we can do is we know that this trade here, and I can go look at my trade and open order and see what my price was, but based on this, my order would be somewhere around the top, and we don't take the bottom of the candle like it was a super entry. We take the middle of that wick. So we're going to say 91.49. So all we're going to do here is we're going to let this play out, right? And I'm going to change this to yellow, and I need this to be blue. There we go. And what this tells me is that I'm tracking this trade, right? 91.49. At the end of this trade, when the 4-hour RSI starts to head down or whatever happens, we're going to close out this trade and see how it did, right? So what your side is this, right? So this is a trade that you can do, and most of us will do this with you too. So any trade that we're doing, we do as a unit, and then we collect data, right? And then the data is basically every time this happens, we post that it's happening. Then we post our entries, right? So let's say that in the Discord, all that was going on, and then I decided to entry, right? And you can, like I said, you can put strategy next 10-minute green moon, right? And then when the entry hits, right, you would be putting soul entry 91. Let's see what we had to mark, 91.49, right? And what that'll do is it does two things, right? So when you put soul entry, we look at it and we know that you just entered Solana at 91.49. We can scroll up in the chat room and see what trade you're doing, right? And as we scroll up, we see that, we can see the strategy next green moon. right? We go up here, we can see, oh, the Solana 4-hour RSI momentum trade. So now we know what you're doing, right? And now as we scroll down, we can also look at the chart and say, okay, I can see if you made the decision on your chart correctly, right? Meaning that was the 4-hour RSI going up? Was there no blue moon? I can kind of just walk through the basics. This is not a difficult trade that's actually happening. It's a pretty simple fundamental trade here. So as far as it comes down to um, seeing what you did or didn't do right or wrong, it just allows it to look at the basics, right? And if we want to know what this trade is, we slide down to the trading 102, and then we just take a look at what it is. So we scroll down. This is the 4-hour RSI momentum trade. Strategy 1 is 4-hour RSI up with no blue moon. On the 4-hour, no blue moon. Strategy is the next 10-minute green moon, which is the entry. And that's pretty much it. Now, system-wise, right, this is what we traded, right? So system-wise, we know that they're averaging about 1%. So we would put this at let's say a 35 leverage, 30x lev. We would put stop loss at 35, or actually target. So target, as we always want to go for. It's about 35%. And stop loss, 30%. 35 is fine. And then what we do here is if somebody's testing this trade, right, they would run that system. They would run a 35% leverage, target 35%, stop loss 35%. And then all we do there is that as this trade goes on, and we're posting as we move forward, we just track the trade. How'd everybody do? What's the next numbers? How did it, how's everyone doing? How many of these trades do we win? How many is it losing? Right? And then we start, every time we see a trade go up, I can go look at it, and then we start developing how to turn this into better entries, better things, right? So for instance, let's say we're on the 10-minute, right? Let's say if you have a rule where you have the 1 hour, right? Don't trade against the 1 hour, right? So here's the 1 hour pushing to the top there. That's our first move in there. We have to decide here what's our closing, right? Where does this trade end, right? So do we go until the next 15-minute blue moon, right? Right now it's about to turn green. It should pump here. Or do we go to where we're selling, what are we closing on, right? More than likely when we're testing it, we're just going to let the stop loss play out and go from there. But yeah, I mean, that's how you develop a trade. That's how you post the trade. And now it's just executing this trade to see what it does every single time until we get the results that we can look at and go, okay, this is out of 10 trades it did XYZ, right? And that's the base of it. But like I said, the whole thing comes down to, like, when you're doing this trade, make it the same situation where you're doing the same trade over and over. So if you're doing if you're just testing a trade, I'd say start off with 100 or 200 bucks and use the same bag over and over, right? So like here, if you have $600 in your bag like this is, then you just go to a scenario and say, okay, I need to let me do a $200 bag, but every single time you trade, make sure you're trading $200 on this, and just run that trade over and over and over. But when you're testing a trade, man, you can 100 bucks, 200 bucks, keep it simple. Targets simple. We could probably get more, but we're just cleaning up. We want to have more wins than losses while we're testing. And if we see bigger gains, then we'll start moving. Now, this trade does have a possibility where it averages 4%. So if you're doing a 30x, leverage on a 4%, that's about 120% possibility, right? So we're going to cut that in half. 120% would be 60. Half of that is 30. So we take it's called the 50-50 rule. We're going for the higher win situation, more law of average of winning. That makes sense. Bum bum. Did I lose my Discord? Discord.
Yeah, we're here.
Yeah, but does that make sense for you?
Yeah, I see it now. I see what you mean.
Yeah. So now what you got? So now you have a trade, right? So this trade will be easy to piece together. It's a very simple trade to do, and all it is when the 4 hour pushes up, no blue moon. We enter on the next 10-minute green moon. That's it. We leverage 35%. We target 35%, which is a 1% move. Our stop loss is 35%. All right. Now we just start making this trade, and then as it goes through, we can develop, entry positions, right? Like so, for instance,
Mm-hmm.
maybe on the entry side, we do the something a little bit different. Maybe we say, okay, you know what? Entry wise, we're getting, let's say that we're averaging about, let's just take this scenario here, right? So let's say we go, okay, you know what? We're going to enter on the next green moon, but what I want to do is, um, I want to play that entry is also when the um, so a lot of times one of the things that we do, like you see this green line here, that's the threshold, right? So when you go to your settings, right, on your moon indicator, and you should have this already, you go to settings, there is the inputs, there's a threshold number, right? And as I move that threshold, you see how that number goes up and down, that little dotted line here. So we have it on 10, right? So a lot of times what we do is this, right? So before we enter a trade or look for a trade, we use the timelines to kind of like have it where, depending on what you're trading, a lot of times we'll say, okay, we're not taking a long until we break the 30, breaks the 10 threshold, which happened here. Once it breaks the threshold, there's a pullback, which happens right there. That would be the pullback that we'd be looking for, which basically kind of played into the entry that we wanted to get into anyways. But that's where volume is heavier. So a lot of times if you're trading with volume, you'd say, I need my 30 to be above the 15, right? Or you can, sometimes a lot of people play the 15 above the 30, right? Which would be once the 15 breaks the 10 threshold, which is right here, then what they would be doing is they'd be trading, when that trade becomes live, as long as it's above that 10 threshold on the 15 line, then, which is this line here, then that's a sign where you can, another something you can add if it fits the trade. I don't know if it fits this momentum trade that well, but that's something that a lot of guys have in their book already, and that's something that they go by, where has to be above the 15, has to be above the 10 threshold in volume in order for that to be considered a trade. A lot of times when they're waiting for a particular trade, they'll also, as soon as the 15 breaks above the 10 threshold, that'll trigger the trade. So for instance, um, this white, I'm going to put this white arrow here. All right, I'll actually make this blue. So when I look at this blue arrow here, that's when the trade actually became live. That's when the 4 hours started to head up, right? If I looked at the current 15-minute and I was looking for my, guide here, my guide would be that I would want the volume above the 10 threshold on the 15, which it is. Um, Now, a lot of times, if it's moving in that direction, the reason why we have the moon reset is just because we always want to have where once there's a move, we want to buy the pullback, right? And all that's doing is it just makes us a little more greedier on our entry, just meaning that we don't jump in a trade as it's pushing, we wait for the retest. So it's just a way to kind of like have a step built into your trading that allows you to be, not jumping a trade. You wait for the moon reset, there's a pullback, better pricing, then you get your entry, you're off and running. But all these little things are just already built into the basics, so that way it's not, you're not chasing a trade. You're waiting for the pullback. It's just setting you up for, you don't have to overthink it. It's very simple. So this trade here would be a simple momentum trade for you to kind of like trade with the masses, right? And we can all, make a trade like this, keep it simple. And then this is strategy, number one is 4-hour RSI heads up. There's no blue moon. Enter on the next, enter on the next 10-minute green moon. Pretty much it. Now, the rest of it comes down to, leverages, targets, stop losses, which we'll get that data once we start making these trades, because then we'll know exactly what this trade produces. And then we can make some adjustments to the trade, right? So that's just that trade there. Now, the 15-minute has kind of like this. So let's say we were looking at Solana, we were trading our 15-minute trade, right? The 15-minute trade that is in the Discord, just kind of like a basic of it, is the high leverage trade, right? So this is where we're looking for it to get above the 50 line. Let me see. And we did 139, watch the trade, pull the cross, okay. Heat waves, all right. 70x leverage, 60% target, 35% stop loss. Profit trail, okay. All right, 15-minute trade, 1 hour green, okay. So for this is where on a high leverage trade, we do it very simple where we use the stochastic RSI on the 4 hour and the RSI on the 4 hour, right? Which is right here, you can see that the 4 hour starts to head up, right? And that's the same trade that we're kind of in now. The difference is that on this one here, we incorporate that when it breaks the 50 line, right? So for Solana and this is the 50 line right here. So when the regular RSI breaks above the 50 and the 4 hours heading up, then that would be considered our trade, which would be somewhere pretty much in the same spot here, right? And then I think at that level, I think it's the same entry, which would be the next green moon. So the only difference is that this trade exists only when the regular RSI breaks above the 50. So if that RSI is below 50, then we don't even take that trade. We only do it when it breaks above the 50, right? So for instance, Solana trade would have been this. So here's a 4 hour when it breaks up above the 20, which is here. And we look at the regular RSI and it breaks above the 50, which is here. Right? That's where that would have created the trade that we would have got into off of this line here. And I'm going to turn that pink. All right, so if I go back to my time frame, which is the 10-minute, I look for that pink arrow right here. The entry for this is very simple. So now that, and this is what the trade is, right? Strategy number one, 4 hour RSI breaks the 20. The regular RSI breaks the 50. That creates this pink arrow. Now, when that happens, the entry is on the next, is the 10-minute green moon, which basically at this point, it's already green, right? So this would be the entry because it's already green. We don't do a reset on the high leverage. We just do an entry. So that would have put this entry here where the guys could have got in at this right here, 89.44. They're doing a high leverage trade. So let's slide this down to the 1 minute so I can kind of like get a little more accurate on the scenario. put them somewhere in this zone here. Which means their entry would be somewhere around here. Their stop loss pullback would have came to about here. And then their targets would have been up here. But what I'm looking at here is the downside to this, right? So if I do my entry up here and I pull this down, now the leverage is actually 70, right? So here you can see here if this entry pulls off, depending on how they got in this entry, if they were too early, too late, there's some pullback action here that happens. There's a possibility here that they could have got in a little bit early on that, and then these wicks could have got them to where they would have stopped out, right? So without doing that trade, I don't know where they got in or the exact side of it, but at the end of the day, if we look and we get into these green moons here, right, and we trade the way we're supposed to, this trade actually goes pretty well, pulls up for about 2.8. So if we're doing a 70x, right, I think it's a 70x leverage, that's 140% on that. So that's the high leverage trade. Let's see what the entry is on there. Is it a 10-minute, the next 10-minute green moon? So I gotta go look at the rules on that one. But that's why once you pick a trade and you're kind of like doing a trade, you just follow the steps of the trade and then just give the information that like what happened to the trade, right? 10 trade review. This is what happened. I entered here. I waited for this to happen, and then I got this X, Y, and Z, right? This is a 10-minute moon. It's there. That was the pullback. Yeah. So always take closer looks at these trades, but that's the high leverage trade. It works the same way. It's just different little steps on the entries, right? What's the let me see. Trailing stop 35, 15 minutes. So this is the one we're going to finish up. We were doing a few more. I gotta go look at people's trades, and then we're gonna close out and have we got strategy one, which is the trade how we enter, like why we're doing it. Now we just need to clean up the entry a little bit, which I can take a look here. So let's say we're cleaning up this entry here. What I would do here is I would look, since it's a high leverage trade, I would go probably into the 3-minute zone here. Let's take a look real quick. Here's our entry. We're looking for our pullback. Let's see what the 15-minute looks like, 10-minute looks like. All right. This is where once we start developing the trades, like we get through all this pretty quickly. 10-minute here. We have a 10-minute moon. We're up above. What's the stochastic RSI? Okay. We're at the top. We wait for the next bottom now. We don't want the bottom. We want the move to the top. It'd be right here, wouldn't it? So on this, normally we're not trading against the 10-minute RSI. So you can see here that the entry, when it comes in, the 10 minutes heading down. So that would be when the 10 minutes starts to go flat right here, or even here is when you would be looking at your entry point for this. So it would actually be here. And that'll be the steps that we can implement here to kind of like the rules for this particular trade. And all these rules come and they develop basically once we start making these trades and we start cleaning up the entries. As far as the RSI, the one that we're on, going to that 10-minute moon, I don't see too much with the leverage side. This is a high leverage trade. The reason why we don't create too many of these high leverage trades is you have to spend a lot of time putting in like safety nets for pullbacks, right? Different trading zones, different boxes, etc., etc. So I got to take a look at this whole trade when I get a chance, and then just implement what the safety side of these are the blue moons in, et cetera, et cetera. Take a little bit of time, but once we have those in, it's pretty much it, man. But on the trade that you're doing there, I would say it's the basics. So now that do you have the indicator, the moon indicator? Joey, you got the moon indicator?